Jerome Powell finds himself in a precarious tightrope walk as he prepares to speak at the Jackson Hole Forum this Friday. The Federal Reserve Chair faces a storm of conflicting pressures: President Trump's relentless calls for his resignation and a murky economic landscape marked by slowing job growth and inflationary signals. This isn't just a routine address, it's a high-stakes moment that could shape the Fed's next move on interest rates. Scheduled for September 17th, the Jackson Hole Symposium, hosted by the Kansas City Fed, is a critical stage when policymakers share insights on economic trends and monetary strategy. Investors and economists alike are watching closely, as the event often sets the tone for future market reactions. Powell's speech, which will air on YouTube at 10 a.m. Eastern Time, is expected to highlight the Fed's cautious approach, emphasizing that decisions will hinge on data rather than political demands. But here's where it gets controversial. Trump has been pushing the Fed to lower rates, citing strong economic indicators and subdued inflation. Yet Powell has deflected pressure, arguing that the central bank must remain neutral until the full impact of Trump's tariffs on consumer prices is clear. Meanwhile, recent data suggests a slowdown in job creation and a sharp rise in inflation metrics, both of which complicate the Fed's path. As Melissa Brown of SimCorp notes, Powell's challenge lies in balancing political scrutiny with economic realities, a task that demands meticulous precision. The Fed's dual mandate, maximizing employment while curbing inflation, adds another layer of complexity. Lowering rates could boost hiring but risk fueling inflation, creating a delicate dance between two opposing goals. Recent data hints at a stagflationary scenario, a scenario many economists call a Fed nightmare. Will Powell signal a rate cut, or will the Fed stick to its wait-and-see stance? Investors, however, seem confident. Wall Street analysts predict an 88% chance of a rate cut in September, with a 0.25 percentage point reduction likely. Yet Powell may avoid directly addressing the timing, opting instead to emphasize data dependence. He needs to signal caution, says Mike Sanders of Madison Investments. If he pushes too hard, he risks being forced into a corner. As the Fed weighs its options, one thing is clear: the outcome of this week's speech could redefine the course of monetary policy for months to come. What do you think? Will Powell ultimately cut rates, or will the Fed hold firm? Share your thoughts in the comments below.